Hello and thank you for joining us today. My name is Karen Drayton and I'm a Client Director at Aberdeen in the Investment Trust team. And I'm joined by Sarika Patel, the Chair of Aberdeen Equity Income Trust PLC, and Robin Archibald, the Chair of Shires Income PLC, who are both here to discuss the proposed combination between the two companies. Robin, I'll come to you first. Could you explain why the Shires Income Board feel that this combination is the best option for its shareholders?
Well, glad to be here. And I think both boards believe that this is best option for their shareholders. It's a very positive initiative. That's certainly what we feel. And it's an initiative that's born of strength. It's born of the fact that both companies are performing in a complementary space. And by combining them, we can produce really quite interesting metrics on costs in particular, and size and scale. So we have no doubt, this being a board initiative, that irrespective of it being within the Aberdeen stable, it makes sense for our shareholders, and we're very happy to promote it accordingly.
Thanks, Karen. From my perspective, Aberdeen Equity Income has had a really good streak. We've been issuing shares since April. We are one of the best performing equity income trusts. And this gives us an opportunity to create a larger vehicle, a vehicle that will combine that success for a broader base of shareholders. Obviously, the cost issues, we will discuss them later, but the fact that the two trusts are within the stable, they use the same investment platform, the disruption is likely to be quite minimal. And this is about really a merger that goes from strength to strength. I think it is in the benefit of Aberdeen Equity Income shareholders and obviously Shires as well. And we want it to be for both parties. Thank you.
Thank you. Sarika, some investors might wonder whether the companies risk losing their heritage or identity. How would you address that point?
So Aberdeen Equity Income is going to be the ongoing legal and operational company, and we are absolutely committed to keeping our progressive dividend, which is the hallmark, and a lot of investors invest in us for that. We are also taking on board some of the investment policy that you had, which our policy, to be fair enough, is broad enough and did incorporate it, but we didn't use, for example, preference shares or investing in non-UK equities. We will bring the best of both organisations, and I think the heritage will be well preserved.
And I think we would believe ours is a longer heritage because we go right back to the turn of the 20th century. A company evolves. We are very different as Shires than we would have been even 20 or 30 years ago. But where we've ended up in is a space that's very similar and very complementary to where Aberdeen Equity Income is. And I'd like to think that the real heritage that we had of an above average income, in fact, you pay a higher income than we do, trying to keep liquidity in the secondary market and so on, all these key ingredients for a UK income fund are being maintained. So in that sense, heritage is one thing, but looking forward progressively is, we believe, more important.
Thank you both. Robin, before recommending a combination with Aberdeen Equity Income Trust, what alternatives did the Shires Board evaluate?
Well, it's commensurate on the board to actually look at the full landscape. And as you're probably aware, there's 18 investment companies who operate in this space. There's also a vast array of other potential initiatives. So we looked at what we could do within the status quo. A few years ago, we merged with Aberdeen Smaller Companies Investment Trust. We thought about other competitor vehicles, but frankly, it was so obvious that the least disruption and the most constructive change could be achieved within the stable itself. So we weren't forced into this by the managing group or anyone else. This, ticking all the metrics and all the boxes that we had to do, was, for us, the right answer, and we hope that that'll prove to be the case over succeeding years.
And Sarika, what qualities were you looking for in the right combination partner, and how did Shires meet that objective?
So first and foremost, Aberdeen Equity Income, we've been always open to any sort of transaction. No trust performs stunningly all the time, and when we have been sort of not delivering as much as we are now, we were open to others approaching us. For us, the critical thing at this point in time with the performance is no NAV dilution, and that was really, really important for us. Aberdeen footing the costs of the merger in the main does support that quite substantially, and we are really grateful to that. But as Robin said, the two companies are not very dissimilar. And I think bringing them together, bringing the strengths together, will create a far more sustainable position in terms of ensuring, as we talked about, equity income and providing a yield for our shareholders is really important to us. And this is actually making it more diversified and sustainable. So the point that it is within the stable is helpful. The systems are similar. The managers have worked with each other before. So in that sense, it really fell in. And I am really grateful to Aberdeen for supporting this. And the boards have worked really, really well together as well and focused on shareholder interest first and foremost.
And I would echo that and say this is about constructive change,
yes,
not destructive change, which unfortunately is something that overhangs the investment company sector rather negatively at the moment. This is totally different combination of strengths.
Thank you, Robin. Sarah, can I ask you on the investment side? I know we've touched on the fact that there's a proposal to bring the preference shares and the overseas holdings across. But what other ways will the investment policy evolve if the combination goes through?
So as you would expect, our board at every strategy day looks at how do we make our investment policy future-proof, because this is a never-changing market. Investment trusts are under pressure to maintain their income, to maintain overall growth. And we have been focused on a combination on total growth for the last at least 3 years. We have been pressurizing, I guess, Tom, to some extent to deliver, and he absolutely has. For us, it was really important to not lose that. And also, again, the advantage we have at Shires is we have a common shared investment platform. We have the same research-led, value-based, index-agnostic approach, which is very similar. So in that sense, we think it's additive. It's going to enhance what Tom is doing with Ian sitting beside him and broadening our base. So in that sense, we really do think it is providing the future combined shareholders with more options to continue to sustain the dividend whilst achieving growth.
Thanks, Sarika.
And from our perspective, it was very important that Tom and Ian could work well together in a complementary basis, because the styles are different. You've been able to deliver a higher yield than we have. And an investment company is quite complex, because it's not just a matter of what the portfolio does, it's how your gearing applied, how you allocate costs and so on. So we felt very comfortable with how AEI has managed to generate a market-leading yield over these years without undermining the quality of the investment performance. And Ian, I think, working with Tom will continue that and add extra bits, as you've talked about before, the overseas potential, the prefs and so on. But it really is a close marriage.
And can I just add to that? I know, sort of moving away from the question you really asked, Karen, but we needed to be confident as a board that they worked well together, and they have in the past. When I started on the board of Aberdeen Equity, it was Tom and Ian who were sort of together. And what they bring is quite different in terms of their sector knowledge as well. Obviously, Tom has a background in financial services. Ian understands utilities and minerals, oil and gas, as well as European markets. So in the sense that they are quite complementary, we've had assurance from both of them that this is going to be really looking at, and perhaps looking at the portfolio in a more balanced way. So in that sense, I am quite actually delighted that we can take this forward.
Thanks, Sarika. And Robin, obviously both of you would like shareholders to vote for this proposed combination and roll into the Aberdeen Equity Income shares. But could you explain a little bit more about the cash exit option and why it's structured the way it is?
Yeah, well, this is about a combination. That's what we're promoting this for. But I think when the investment company sector is looking at change, it's etiquette, and it's required etiquette where people are being put into a change to offer them the opportunity, if they want, and we hope most of them won't need it, to come out for cash at a level that's better than they would be able to do in the secondary market. In the same way as we hope, going forward, there'll be sufficient liquidity in the combined company that if somebody wants to sell part of their shares, for whatever reason, they can do so, and not at a million miles removed from net asset value. And as Sarika mentioned earlier, you've been issuing stock, which shows demand. We haven't issued stock for any while, but the cash exit is a mechanism that's there, but it's a combination that we're promoting.
Mm-hmm. Thank you. And Sarika, can I turn to you?
NAV dilution is the biggest thing that we are sort of seeking to safeguard ourselves from. And I think we are in a position of strength. I think to join a trust that is growing, we hope that most shareholders will feel that they would like to roll over into a larger vehicle that will obviously protect what they already have, but hopefully enhance it. And in that sense, perhaps my hope is that most will take the rollover option. But obviously, every shareholder has to consider what is important for them at that moment in time. And that's why it's critical to have that option and not force shareholders into something that they may not want. So I think actually this is really good for our shareholders, but equally well yours.
And I think that important point about avoiding costs, it is essentially a cost-free transaction for continuing shareholders in both companies. And that's, I hardly call it generosity, but nevertheless, that is the way this deal's been structured. And I think that's an excellent USP of what we're providing to shareholders today.
And may I add just one more point, which is really important to shareholders as well. The more shareholders that come across makes sort of the cost easier to apportion amongst others, and therefore per shareholder unit cost is reduced. And that is one of the biggest advantages to the shareholders of this merger.
Just to expand on the cost point, Sarika, how does the combination improve the cost base for the enlarged trust?
So just as I've said already, what we are hoping is as the shareholder base increases and the costs remain the same, the per unit cost will be lower. So OCR, which is the ongoing cost ratio per shareholder, should reduce. We've also capped the fee across Aberdeen with the result that the OCR will never exceed a certain limit. In that sense, the cost for all shareholders will definitely be lower. So in that sense, on an ongoing basis, the money that the managers make is more likely to be distributed as dividend than used in costs. So I think it is really, really important for shareholders to understand that not only the transaction costs are lower, but the ongoing costs will also be lower.
And I think it's fair to say that for Shires, that's even more significant. Our costs and our OCR tickle around the 1% mark currently. They'll fall under this transaction into the combined company by about 20%, 0.78, I think is the amount. And I think there's another quite important point, which is the reserves. The bigger company will have more capacity. I'm not saying it will, but it can use revenue reserves, it can use retained profits and realised capital to keep that dividend up and potentially growing, which you've done very well over the years, without putting portfolio strain. So costs are one part of it, but the investment performance and the combined company's strengths of it really not to be underestimated.
Thank you. Robin, dividends are always top of mind for income investors, of course. So how should shareholders think about dividends throughout this transaction?
Well, we're paying a 10 pence dividend, which is, just to explain what we're doing, we have almost had our full financial year, and therefore we felt it was fairer to ensure that we paid out to our rolling over shareholders the dividend that would otherwise have been payable for the year. We also have dipped a little bit into our revenue reserves as a fillip to that. But essentially, what will happen is that our assets will transfer across, the share premium account will be created, and then it's over to EI to fulfil the dividend going forward. There's a forecast of a dividend of 23.1p, and once you work through the maths of it, that's an improvement compared to our historical trend. So from a dividend point of view, a Shire shareholder is doing quite well. And after all, this is an income fund.
From Aberdeen Equity Income's perspective, we are committed to a progressive dividend and we intend to continue with it. As Robin mentioned, we have already outlined in the circular that our dividend will be at least 23.1 pence per share. We have announced a dividend for our first quarter this year, which is for shareholders on our register as of 26th February. It will be paid out on 27th. Thereafter, our second dividend will fall due in June, and that will meet all the combined shareholders of the new company will be eligible for that dividend, and we intend maintaining it. Aberdeen Equity Income has a dividend hero status recognized by the AIC, which is 25 years of continuous progressive dividend. We are really, really proud of it, and we absolutely are committed to maintaining it. You mentioned use of reserves. We have done that briefly in the past, obviously during COVID or Brexit, and that's a unique feature that investment trusts have. And we intend using it, but we will be committed to trying to have as much covered as possible. Obviously, the initial period of bringing everything together and having a larger base to deliver the dividend to may require us to dip into reserves, but that's exactly what they're there for. But thereafter, I think the combined investment policy should deliver a covered dividend.
And to put it into perspective, both of these companies are at the highest end amongst the 18 in the sector of their income payout.
Yes.
You, I believe, are the highest,
Yes.
and I think we're second highest. So we're talking of already quite significant income distribution, as well as good total return from both companies.
Thank you both. Sarika, can I ask you a question about board composition? How will the new board look post the combination if it goes through?
As part of the proposal, it's intended that Simon White, who is a director with Shires Income, will join our board. And we really look forward to working with him and are delighted that he's agreed to join us. Caroline, who was the senior independent director, stepped down at our AGM. And that'll leave us with a sum total of 5 directors, which I think is the right number for the combined venture. So I look forward to working from Shires, and I think it will enhance our board skills and strength.
And I would commend the outcome, because having too many people on a board, as opposed to a closely cohesive board that knows what it's doing, is where you're going to end up. I would commend Simon, who's been an excellent addition to our board. And I'm sure will be an advantage joining there. And we're all pleased as a board that in standing down and all volunteering to stand down, that we're handing our assets across to an excellent vehicle. And I'd like to commend my own colleagues for being magnanimous and professional in how this has all been conducted over preceding months. So I think, again, it's about outcome, and it's a good outcome.
Thank you. And I think we're on our final question to both of you. Sarika first, what would you each like to leave shareholders with as they consider their vote?
Vote soon and vote often. Sorry.
So for Aberdeen Equity Income, I think this is an opportunity for our shareholders to be part of something that is bigger. It will bring together an enhanced board, a widened toolkit that both our managers can collectively use to not only deliver the income that we have, but the total returns that we also need. And I absolutely commend this to our shareholders. Our shareholders are largely retail and private investors, and they are really, really important to us. And it's very similar with Shires, and that's why I think one of the sort of motivations for doing this was our shared shareholder register, which is private investors. And we really, really value their opinions. So they really need to go read the circular and cast their vote, because what they think really, really matters to us.
Thank you, Rob.
And I echo that again. Please try and vote, particularly when your platform held. Give yourself the time to understand what's going on. But we do need your votes, and we'd like you to support the transaction, because sometimes it's quite difficult for retail shareholders to do. We think this is the right thing for both companies, and we want our shareholders to support it.
And I just want to echo, we are jointly urging our shareholders to vote, because we jointly believe, as boards who have done the due diligence, who have worked really hard to make this happen, we think it's in the best interest of the company and the shareholders.
Thank you both very much.
Thank you.
Thank you very much to all of you for joining us today. Please can I remind everybody watching that the topics discussed today are covered more fully in the circulars for both companies, which you'll find on the company's respective websites. I'd like to pass you now over to my colleague Evan Bruce Gardine, who will host a Q&A session with the 2 fund managers for the proposed trust.